Hi there, Trisha here. I'm going to share with you today the three trades that I took. You could have had five for sure. Also going to show you how I exit my trades in stages. If you want my two setups that I use, you can go to www.easyemintrade.com and get the trade setups that I use based on the longer tick chart and the smaller tick chart, and using three charts for confirmation using indicators and so forth. So with that, I'm going to get started. This is the longer tick chart that we start out looking at, and first thing in the morning you can see that we're in between both moving averages, so it's not likely that much is going to happen. Even if a scalp setup occurred short, I would not take it because there's just not much room in between the two moving averages. If we had more space in between the two moving averages and a scalp trade set up short, then I might consider taking it, but it's not likely that that's going to happen. If you take a short, usually you want your price to be below both these moving averages. The first trade that I took was at just about 1043, 1042, and it was a scalp setup, and I got in at 833.25, and I exited it at +2. I just put a limit order in for +2 right off the bat because my longer tick chart, I noticed that I entered and the price actually closed just below the moving average on the longer tick chart, and I like it to be just above the moving average. So I exited at +2. This is a smaller minute chart, and I wanted to show it to you because we did have a long scalp setup occurring on the smaller tick chart. But if you notice where the white circle is, the trend indicator is starting to move down, and also our ticks are in negative territory. So even if you were to take that scalp trade long, it's just not high odds that it's going to work out. It's probably going to turn against you, and as you can see, you would have made maybe a small amount, but it's just not high odds. And also I wanted to point out that when you do look at your smaller minute chart to get confirmation for your entry, if it looks like a sloppy mess like it does right up here in the middle here, just wait, just sit back and wait till a cleaner setup occurs, because you're just going to get frustrated because it's not going to go in the way that you're expecting it to until you have a definite direction. I'm showing you this because somebody was asking me about this scalp short that occurred, the scalp setup short that occurred, and it was about at 12:21. And the reason why we didn't take this is because we're not in a downtrend. We only take shorts when we're in a downtrend, and based on our longer tick chart, we're not in a downtrend. And also on this smaller minute chart, what I did was I drew the Fibonacci lines in, and we would want this price to come below 50% to be considered in a downtrend, because technically, we haven't broken 50%, so we're still in an uptrend. And that was the lowest that we ever got. It bounced right back up and continued going. So it's just not a high odds trade doing a counter trend trade, at least using the setups that I use. There are people that are very successful counter trend trading. I just don't do it. This is my longer tick chart, and these three arrows represent three entries that occurred based on the setup on the longer tick chart, and I'm going to show those to you now. The first one actually also had a scalp setup occur, and I like when that happens because usually it's going to be a nice mover when we have a setup on both charts occurring. I got in at 836.50, and if you trail stop using the pivot highs and pivot lows, you would have had a gain of 2.25. Now, what I do is I exit in stages. So if I'm trading three lots, I exit my first lot at +2, my second lot at +4, and my final lot I will trail stop out. Now, once you get your +2, you can now move your stop to your entry point. So now no matter what happens, you're profitable. Once you get your +4, then what you can do on that final lot is move your stop to +2. And then at that point, just trail the stop, moving with price. And so this gain of 2.25 is based on trading one contract and only using the trail stop method, using pivot highs and pivot lows to exit. Now, if you trade two contracts, you can do +2 for your first lot and then trail that second contract that you have. So, it's just a way to lock in profits right away. If you're only trading one contract, if it's not a trending day, you might want to consider, just putting your limit order in for, +2 right off the bat. So at least you're walking away with a profit and, not risking, coming back on you. This is my indicator showing that it's not technically trending, but it is moving up. And so sometimes if everything is in alignment, I will take a trade if everything else is in alignment and the trend indicator is moving up, even though it's not in red territory. So, that's something just to consider, and that's what I did here. We had the longer tick set up. I didn't take this trade, but you could have taken it. The reason why I didn't take it is because the high of the day is at 842.50. So if you entered, you could have definitely got your +2, but it wasn't a high odds trade because of the high of the day being right above where you're entering. Because usually when you get to the high of the day, it's going to bounce. It's going to pull back, and that's exactly what it did. I think on the smaller minutes chart, this looks like actually it was a topping tail. So the price came right back down to the high of the day. So again, not a high odds trade, but it could have worked. This is a setup that occurred on the longer tick chart that I showed you previously. This was the third arrow, and we had confirmation on the smaller minute chart, and all three charts were in confirmation. So we don't have to wait for our scalp setup because we're taking entry off of the longer tick setup. So we got into 841.50, and if you use the trail stop method, trading one contract, you would have been stopped out at 843.25. Now if you use the +2, +4, and then trail, then you would have gotten your +2 and your +4, and then you would have been trail stopped out at 175, or if you move your stop to the +2 at that point, once you get your +4, then obviously you would have got your +2, not +1 3/4 on that final lot. So again, just depends on how many contracts you're trading. This is a setup that actually occurred just about 3:30 that I did not take because, as you know, I don't trade past 3:30, and this was very close to 3:30. But this is a scalp setup long that was occurring, and this was an awesome trade if you did take it. You've got confirmation on all three charts, and you've got confirmation on all of your indicators. It was just a picture perfect setup, and even if you only had one contract and you trail stopped out, you would have trail stopped out for a gain of 4 1/4. Let's see, actually, yeah, 4 1/4. So right where that round circle is up there to the right, that's where you would have been trail stopped out. So that would have been an awesome trade. I just don't trade after 3:30. Even though it wasn't after 3:30, it was very close to 3:30, so I just didn't take it. Wish I did, but I didn't take it. So anyway, those are the three trades that I took, but I showed you 5 actually that set up. And the first trade that I took was a scalp setup with +2 if you're only trading one contract and trailing out. Trade 2 was using the longer tick chart setup for 2 1/4, and trade 3 was a longer tick chart setup for 1 3/4 gain. So if you only traded one contract using the trail stop method on pivot highs and pivot lows, you would have had a gain of +6. If you use the exiting in stages, obviously you would have had much better gains today. So it just really depends on how many contracts you're trading. So go to www.easyemintrade.com and get the setups.